Have you ever looked at the vast fortunes built in the market, at the legendary names, and wondered, how? How did they turn modest sums into millions, often from nothing but sheer will and cunning? I faced that very question, driven by an insatiable hunger to understand the market's hidden language. What I discovered, through monumental gains and devastating bankruptcies, was brutally simple. Success in speculation isn't about luck, or magic, or even genius. It's about following specific rules with an iron discipline, rules that most ignore until it's too late. I learned these truths the hard way, paying for them with my own blood, sweat, and millions. The market, you see, has a seductive whisper. It promises quick riches, easy entry, a shortcut to a life of ease. This alluring song draws in countless ambitious souls, eager to make their mark. Yet, for most, that mark becomes a scar, a testament to lost capital and shattered dreams. They enter unprepared, mistaking ceaseless activity for genuine progress, gambling their future on fleeting impulses rather than immutable laws. I speak from the crucible of experience. I witnessed fortunes made and lost, lives transformed and utterly ruined, all within the blink of an eye. The difference between lasting triumph and crushing defeat boiled down to this: understanding the market's rules and possessing the unwavering inner fortitude to stick to them, no matter the temptation, no matter the fear, no matter the prevailing chaos. This is a path demanding courage, humility, and relentless self-control. Many believe their intelligence alone will see them through. They concoct elaborate theories, absorb endless streams of news, and consult every expert. But the market cares nothing for intellect that isn't matched by discipline. It constantly tests your emotional resolve, preying on every human weakness, hope, fear, greed, impatience. Without mastering these inner demons, even the most brilliant mind will falter and fall. My own journey was a testament to this truth. My greatest gains, the moments when I turned thousands into millions, were not born of brilliant predictions or insider tips. They were the direct result of patient observation and the ruthless execution of principles that are timeless. And my devastating losses, the bankruptcies that brought me to my knees, were almost always the consequence of abandoning those very same rules, succumbing to the human frailties I warn you about. What I am about to share with you is not a collection of clever tricks or fleeting tactics. These are the fundamental principles, the very blueprint of financial mastery, forged in the relentless fire of Wall Street. They are the 7 rules I lived by, the ones that guided me through market panics and booms, ensuring that even after being broken, I could always build myself again, to new and greater heights. This is your guide to surviving the market and claiming your own fortune. Subscribe now, leave a like, and write any comment. This way, you'll help more people see and hear this message, and I'll know that my work is not in vain. The first, and perhaps most vital rule I learned, often through the painful tuition of my own early mistakes, is this: never obsess over individual stocks alone. You must master the market's overall trend. Many beginners, and even seasoned gamblers, fixate on a single company, its story, its product, believing its fate exists in isolation. This is a fundamental misunderstanding, akin to trying to paddle a small boat upstream against a raging river while everyone else is being swept downstream. No stock moves in a vacuum. Every single share, every company, is inextricably linked to the broader market tide. When the bull market is roaring, pushing everything higher, nearly all stocks will be lifted. When the bear market is relentlessly grinding prices lower, dragging most things down, even fundamentally sound companies will struggle. Trying to pick individual winners without understanding the prevailing current is a recipe for exhaustion, frustration, and ultimately, financial ruin. My early years were filled with such costly misjudgments. I chased what I believed were hidden gems, only to be crushed by the overwhelming force of a bearish market that dragged everything down with it. It took me years, and a substantial amount of capital, to fully grasp this profound truth. The general direction of the entire market is paramount. It is the dominant force, the inescapable current that determines the ultimate destiny of almost every stock. This means your first step, before ever considering a buy or sell of a specific security, must be to determine the health, direction, and underlying strength of the overall market. Is it truly a bull market, pushing everything upwards with conviction? Is it a bear market, grinding prices lower with relentless selling? Or is it a choppy, indecisive period where clear direction is elusive? Your answer to this big picture question should dictate your entire approach, your very stance in the game. The market always moves along the line of least resistance. It will follow the path of least effort. Your job is not to fight this path, but to identify it and flow with it. If the overall current is unmistakably down, my rule is never to buy. If it is unmistakably up, I rarely consider selling short. I look for stocks that are aligned with the big current, not against it. This simple alignment saves countless dollars and prevents endless frustration. This rule, once understood and applied, becomes your ultimate shield. It prevents you from committing capital against the overwhelming force of the market's will. By broadening your vision beyond the single tree to see the entire forest, you avoid the most common trap of trading perfectly good individual stocks into a relentlessly falling market, thereby preserving your capital and your sanity for when the true tide turns in your favor. The second, and perhaps most challenging rule I meticulously cultivated through bitter experience is this: patience is your greatest asset, and you must wait for the market's undeniable confirmation before acting. Many are drawn to the market by the thrill of constant action, the desire to always be in the game, believing that ceaseless activity is the key to profit. But I tell you, with the certainty of millions earned and lost, the big money is not in the buying and selling, it is in the waiting. This truth often strikes aspiring speculators as counterintuitive. They equate activity with progress, restlessness with diligence. They feel an irresistible urge to constantly be doing something, to place a trade, to snatch every small fluctuation. This pervasive impatience, however, is a direct path to premature entries, to suffering through whipsaws, and to watching precious capital erode in a series of ill-timed, forced trades that fail to materialize into anything substantial. My own journey was marked by numerous instances where impatience cost me dearly. I would identify a promising situation, but then, lacking the iron discipline to wait, I would jump in too early, before the market had truly declared its intentions. This often left me trapped in sideways movements, battling minor fluctuations, or worse, caught in a reversal that punished my haste, forcing me out with a loss while the larger, more profitable move awaited its true signal. True market mastery demands a profound capacity for strategic inaction. It is the unwavering discipline to sit idly by, sometimes for weeks or even months, observing the market with cold detachment, conserving your mental and financial energy. This period of waiting is not passive, it is an active, vigilant process of allowing the market to speak, to reveal its true intentions, to present an undeniable signal that screams "act now." This brings us to the crucial concept of confirmation. My rule is simple: my opinion means nothing until the market confirms it. I would form a thesis, but then I would wait. I would wait for the stock to show genuine strength, to break out of its consolidation on strong volume, to clearly establish its path of least resistance higher, or, conversely, to decisively break below support, showing undeniable weakness. Only then, when the market itself validated my idea, would I commit my capital. This deliberate waiting for undeniable confirmation protects your capital from being exposed to uncertain situations and minimizes the risk of acting on mere speculation. When the market itself gives you the clear signal, when the forces align, your risk is drastically reduced, and your potential for profit is amplified. It transforms trading from a game of chance into a disciplined pursuit of high probabilities, guaranteeing that your entries are made with profound conviction, not hopeful guesswork. The third, and arguably most brutal rule I learned, a lesson etched into my soul through devastating bankruptcies, is this: losses are an inevitable part of speculation, but large losses are a choice, and preserving your capital is your absolute first duty. Many beginners, and even seasoned players, fundamentally misunderstand this. They focus solely on making money, neglecting the paramount importance of protecting what they already possess. My own early years were filled with painful reminders of this truth. I allowed small, manageable errors to fester, driven by hope or by pride, until they metastasized into colossal, account-annihilating defeats. I watched my hard-earned capital, the very ammunition for my future endeavors, simply vanish. I learned, at immense cost, that you cannot make money if you have no money left to trade. You cannot learn if you are swiftly expelled from the game. Therefore, my unwavering rule became simple, yet profoundly difficult for the undisciplined. If a trade moved against me, I cut it immediately, ruthlessly, without hesitation, and without regret. The small loss incurred was merely tuition paid for a valuable lesson, a controlled expense for an invaluable education. This swift, decisive action preserved my remaining capital, ensuring that a minor error did not escalate into a debilitating financial wound. The psychological traps that prevent this crucial act are insidious. Hope whispers that a losing position must turn around, that the market owes you a recovery. Ego refuses to admit being wrong, compelling one to cling desperately to a flawed judgment. These human frailties override logic, paralyzing the speculator and forcing them to watch as their capital bleeds away, simply because they cannot bear the discomfort of realizing a loss. This blind refusal to accept defeat inevitably leads to the deadliest of all traps, averaging down. The speculator, consumed by the delusion of getting a bargain, adds more capital to a losing position, convinced that lowering their average cost will somehow guarantee a profit. This is not strategy, it is a desperate, self-defeating act of pouring good money after bad. doubling down on a mistake that the market has already unequivocally condemned. Ultimately, cutting losses swiftly and without hesitation is the most brutal, yet most essential rule for survival in the market. It is the uncompromising discipline that distinguishes the professional speculator from the doomed gambler. By adhering to this rule, you ensure that your capital, your mental fortitude, and your ability to seize future opportunities remain intact, transforming potential ruin into a mere, temporary setback on your path to enduring wealth. The fourth crucial rule I learned, a powerful counterpoint to cutting losses, is this: once you are in a profitable position, you must possess the discipline to let your profits run, riding the big waves to their logical conclusion. Many aspiring speculators, having successfully initiated a trade and watched it turn profitable, succumb to the fear of losing their paper gains. They snatch a few meager profits, exit prematurely, and then watch in agony as the stock continues its powerful upward trajectory, leaving vast sums on the table. This premature exit, often driven by fear or impatience, is a direct betrayal of your own hard-won insight. You've done the work, identified the trend, entered correctly, and the market has confirmed your judgment. To abandon a profitable position simply because you fear a minor correction, or because you want to secure a small gain, is to miss the entire point of speculation. True wealth is built by capturing the bulk of major moves, not by scalping tiny fractions. Subscribe now, leave a like, and write any comment. This way, you'll help more people see and hear this message, and I'll know that my work is not in vain. My own experience taught me that the biggest money is made by patiently riding a trend once it has clearly established itself. I would initiate a position, confirm its validity, and then, critically, I would wait. I would observe the signs of trend exhaustion, the loss of momentum, the signs of genuine distribution, rather than being swayed by minor fluctuations or the temptation to grab a quick, limited profit. The discipline involved in letting profits run is immense. It requires overcoming the insidious psychological pull of greed, the desire to get the last dollar by holding too long, and fear, the terror of seeing paper profits diminish. It demands an unwavering conviction in your analysis and a profound trust in the market's continuing direction, even when minor corrections occur or doubts creep into the collective sentiment. I would always seek to pyramid on strength, adding to my winning positions as the market continued to confirm its trend. This strategy allows for exponential growth, transforming a modest initial gain into a colossal fortune. But this pyramiding is only possible if you have the discipline to let your initial profits run, using them as a base for increasing your exposure to an already successful, confirmed movement. Ultimately, true wealth in speculation is built not on countless small trades, but on a few major, correctly identified trends that are ridden to their logical conclusion. The ability to let your profits run, to resist the urge for premature exits, and to ride the big waves of the market, is a hallmark of the professional speculator. This disciplined patience in success is what separates those who make good money from those who accumulate vast, enduring fortunes. The fifth, and perhaps most critical rule I learned, the constant battlefield that determines who truly profits and who ultimately perishes, is this: the market tests your psychological fortitude above all else, and you must conquer the inner enemy of your own emotions. All your knowledge of trends, all your patience, all your rules for cutting losses and letting profits run, will come to naught if your mind is a slave to hope, fear, and greed. This internal struggle is the ultimate test, the true crucible of a speculator's character. My own journey was a relentless testament to this truth. I have seen countless individuals, brilliant in their analysis, meticulous in their planning, ultimately brought to their knees by the very human frailties I warn you about. They understood the mechanics, but lacked the iron discipline to execute under pressure. Their emotions, left unchecked, would invariably override logic, compel impulsive actions, and systematically unravel even the most perfect strategies. Fear, in its many insidious forms, is a constant saboteur. The fear of missing out, FOMO, pushes you to jump into trades too late, chasing prices that have already run their course. The fear of taking a loss paralyzes you, preventing the swift, decisive action needed to cut a small error before it escalates into a catastrophic one. And the fear of being wrong prevents you from admitting mistakes, leaving you trapped in a cycle of denial and mounting losses. Greed, equally destructive, whispers seductive promises of unlimited gains, pushing you to take excessive risks, to over-leverage, and to refuse to exit winning positions even when the market screams exhaustion. It compels you to demand too much, to chase the last dollar, only to watch colossal paper profits vanish as the market, in its indifference, inevitably corrects, leaving you with regret rather than profit. The daily battle for objectivity and detachment is paramount. You must cultivate the capacity to observe market movements with the cold, scientific precision of a surgeon, rather than the fervent hope or paralyzing fear of a gambler. This detachment allows you to make decisions based solely on facts and probabilities, unclouded by personal biases, transient emotions, or the seductive whispers of the crowd, ensuring your actions are always rational, never reactive. Ultimately, self-mastery is the single most valuable competitive edge you can cultivate in the market. It is the unwavering ability to silence the turbulent inner landscape of hope, fear, and greed, to maintain composure under immense pressure, and to ensure that your principles are executed flawlessly. Only the disciplined mind, the mind that has conquered its own inner enemy, can truly profit from the market's raw power and turn its volatility into a consistent source of wealth. The sixth and seventh rules, inextricably linked and fundamental to enduring success, are a testament to the dynamic nature of the market. You must constantly learn, perpetually adapt, and eternally remain humble. Market mastery is not a destination to be reached, a final state of knowing. It is an ongoing journey, a continuous process of evolution that demands relentless vigilance and an unyielding commitment to truth, however harsh it may be. My own career, marked by immense triumphs and devastating bankruptcies, was a relentless cycle of learning. Every loss, every misstep, every unexpected turn of events, served as an invaluable lesson, a tuition paid in bitter experience. I meticulously dissected my failures, not for self-recrimination, but to extract the precise wisdom that allowed me to rebuild stronger, to refine my understanding, and to avoid repeating the same costly errors. The market is the greatest teacher, but it demands meticulous attention from its students. Furthermore, the market itself is not static. It constantly evolves. The conditions of yesterday may not apply today, and the strategies that worked in one era may prove futile in another. Therefore, the ability to perpetually adapt is paramount. Clinging to outdated methods, refusing to acknowledge changing market character, or believing that past successes guarantee future triumphs, is a direct path to ruin. One must remain flexible, nimble, and willing to shed old beliefs when the market presents new truths. This leads directly to the seventh rule. You must remain eternally humble. The market has no respect for reputations, for intellect, or for past glories. It is the ultimate leveler, consistently humbling those who approach it with arrogance, overconfidence, or a belief in their own infallible foresight. Hubris, I assure you, is the most expensive luxury in speculation, and the market will extract a merciless price for it, often stripping one bare to teach this fundamental lesson. Humility demands that you acknowledge the market's supreme authority, that you respect its power, and that you understand its inherent unpredictability. It means accepting that you will be wrong, often. But more importantly, it means cultivating the wisdom to admit you are wrong swiftly, to cut losses without ego, and to always prioritize the market's truth over your personal opinion. This profound humility is the ultimate shield against repeating fatal mistakes. Ultimately, the adherence to these 7 rules, mastering the trend, cultivating patience and demanding confirmation, preserving capital ruthlessly, letting profits run, conquering emotions, and perpetually learning, adapting, and remaining humble, is the path to enduring longevity and consistent profitability. These are the foundational pillars forged in the crucible of my own life, guaranteeing that your journey, though arduous, will ultimately culminate in financial mastery and the profound satisfaction of true market wisdom. Subscribe now, leave a like, and write any comment. This way, you'll help more people see and hear this message, and I'll know that my work is not in vain.